Good morning, everyone. Welcome to today's session. In today's session, we are going to look at Learning Unit 5. So this is our last session on Learning Unit 5 before we move on to Learning Unit 6. So in this session, we are going to do two exercises where we look at recording our credit and sundry transactions. So one question is question 5.8 in your text box that you had for homework. And then the other question is a revision question just to test the basics again. Okay, so before we start off, let's just recap the important terminology and stuff that you need to know for this section. Okay, so before we start, the first thing is your assignments. I just want to remind you that your assignments are due on the 4th of May. I had a question regarding your answer sheet, so they communicated and said that you guys will have to create it on your own. This is the first year that they're not going to provide an answer sheet. I'm assuming the reason for this being that the similarity reports, that the scores that we see coming through should look a lot different if you guys create it on your own, because they don't look exactly the same. Then secondly, you also have to type out your assignment, so you can't do a handwritten one. It needs to be typed, the information. So that was also one of the questions I had, so just to explain that to you guys as well. And then remember that you need to include referencing. Make sure you've got in-text referencing as well as a bibliography for the sources that you've used. Now, your main source would be your textbook, but you can also use other sources like web pages and internet sources that you would also have to reference. Okay, so that is just information regarding your assignment. And then remember, you're writing your test on the 23rd of May, and the information we are going to cover then in the first week of May will be the last learning unit on which you will write. So at the moment, you can study learning units 1 up to 5 in preparation for your test. So you can start preparing for your test. And then just based on some of the attempts that I've seen on the revision question on learning unit 1 to 3, just make sure that when you do the accounting equation that you do not get confused with the symbol specifically for owner's equity. That one is a bit tricky. If you misinterpret which is a positive and which is a negative, you will note that your accounting equation doesn't actually balance. So remember, we say the owner's equity increases on the credit side. So that means a credit would be a positive and a debit would be a negative. So that means your capital, your income would be positively influence your owner's equity, whereas expenses and drawings would negatively impact your owner's equity. So just make sure that you go back and just make sure that you understand that concept and you don't make that mistake in the test or in the exam. Okay, these are the learning objectives that you need to be able to do if you are on top of learning unit 5. Now, the main things that you need to be able to do is complete the journals, the credit as well as the sundry journals, and then to transfer that information from the journals into your general ledger and then into your trial balance. So that is what you need to be able to do at the end of this learning unit. So let's quickly just recap where we are at. Okay, so if we talk about the accounting cycle, we spoke about the fact that we start with transactions. Transactions is where we find the information on our source documents. That is where we start our recording process. And that information is then recorded into our journals. Now, those journals are split in between your cash, your credits, as well as your sundry journals. And we are currently focusing on the credit and the sundry journals. So what would happen is you would take the information from the source documents and then you would go capture that information in your journals. Now, what is very important when you get to the journals is to make sure that you read whether it is VAT inclusive, VAT exclusive, whether we are registered for VAT or not, because that will impact whether you will have a VAT amount or not a VAT amount. Then once we've captured all of the transactions into the journals, we will then total these journals and get a total for each column. Those columns totals then get transferred to your general ledger, your T account. And there you would actually then go summarize what is the total of each type of transaction. So we summarize similar type of transactions into your general ledger. Then once we've captured all of those transactions into your general ledger, then we take that information, we go balance your general ledger, and then we take the totals or the subtotals, and we then summarize it in a list called a trial balance. Now remember, the trial balance has a debit and a credit column. If I total the debit column, it should equal to the total of the credit column, and then I know I've actually balanced my trial balance, and then I've got a debit for every credit in my accounting records. Okay, so that is just the accounting cycle where we at. Then to look at the journals again, these are the main journals that you have. They are broken up in your cash, your credit, and your general journals. Now remember that your cash journals would either increase or decrease your cash. So your cash book receipt increases your cash, whereas your cash book payments decreases your cash. Your petty cash would decrease your petty cash. Then your debtors journals where you record all your credit sales. And then the DAJ, your debtors allowance journals where you record any credit sale returns. Okay, so any credit sales that I made previously where it's returned or where I give a rebate or a discount would then be recorded in your debtors allowance journal. Then your creditors journal is where you record your credit purchases, and then any returns relating to credit purchases to our suppliers would go to our creditors allowance journal. And then anything else that does not fit into your cash or credit journals would go to your general journals. Okay, now these are just the main steps. As you get more familiar with this, you will actually do this automatically. So the first step is you need to identify which kind of journal are we busy with. Then once you've identified it, you have to decide what are the accounts or the columns in the journals that will be affected. So will it be bank? Will it be debtors control? Will it be sales? Will it be VAT? So which columns are affected by the transaction I currently have in hand? Then you have to make sure that you start with the main column. Now the main column would be VAT inclusive. So that means that amount is at 115%. Then once you've got figured out what the main column is, then you go and remove the VAT component and place that into the VAT column. And then the remaining portion will be placed in the other column that you looked for in number 2, and that would only be at 100%. Now in the event where we are not registered for VAT, you would skip the VAT step because you would not work out the VAT, and you would just include the information in the other column would be exactly the same as the VAT inclusive amount. You do this for all your transactions. So all the transactions from your source documents, you do this process, steps 1 to 4 for each and every one of that. Then you total all the columns once you are done. And then those totals, the total in your main column, so let's take, for example, your debtors control, should equal your output VAT column and your sales column. The exception is your cost of sales column because that column is separate, it's on its own, so that would not be added to see if you've matched the columns correctly. Then each column, once you've totaled it, you then post that total to your general ledger account, and you do the same for each and every column. And you might find that you have multiple journals going to the same T account. That is absolutely fine. That is how it works because we use one account for all types of transactions. And then once you've finished capturing everything in your general ledger account, then you balance or you total your general ledger account, and then that balance or total is what you then transfer to your trial balance or your list, where you summarize all of these transactions. Okay, now let's quickly just look at the structure of your debtors journal again and what it looks like. So we've got the document number, the date, the details. Now the details is the person who you sold it to. Then your debtors control, that is your main column, that is your VAT inclusive column, will be debited. and then you'll see your output VAT and sales column would be credited, and your sales is excluding VAT. And then at the end, we've got a cost of sales column, but that is only applicable if you've got a perpetual inventory system. Okay, and that is generally your sales value after you've taken your markups into account. Then your debtors allowance journal looks exactly the same as the debtors journal, except output VAT changes to input VAT, sales changes to sales return, and the opposite direction for the accounts. Okay, then your creditors journal looks similar to your debtors journal, except instead of going to debtors control, it goes to creditors control. Instead of sales, it goes to trading inventory. Now your main column is your creditors control, whereas your trading inventory is your VAT exclusive amount, so it's one of your sub columns. That one will be purchases if we look at a periodic inventory system, and only the totals of each of these columns will get transferred to your general ledger. That's very important. And then your creditors allowance journals, the only difference from your creditors journal is input VAT changes to output VAT. And then instead of crediting creditors control, you will debit it and credit all the other accounts. Then your general journal, this is where we capture any type of transaction that does not fit into any of the other transactions will be captured here. And just to remind you, the format looks slightly different. You start with your document number, so your journal voucher number. Then you've got your day. The details is the account names. Your general ledger account names get captured under the details. And then your account number or your folio's account reference number, your debit and credit needs to equal. Okay, and then once you finish, you put a narration at the bottom of your transaction. Okay, and remember this format looks very similar to that of a trial balance, but do not confuse the two. You will get a 0 in a test if you confuse the two. Okay, then this is just a summary. Once you do the general ledger, just basics on what will be debited, what will be credited, and remember that for every debit there needs to be a credit. And just know how it affects your general ledger accounts. And then our trial balance, just remember it's split in between your statement of financial position, which is your balance sheet, your assets, liability, and owner's equity, and your nominal account section, which is basically your income statement, which shows your income and expenses. And it's very important that we draft the summary because we use this to make decisions in the business, and it is a quick way for the owners to see what's happening in the business without going through all the detailed transactions that you've captured into the journals. Okay, so we're going to do question 5.8 in this session, and then we'll do the revision question in the following session. So I'm going to share the question with you guys. So I'm just going to stop sharing here. Okay, you can find this in your textbooks on page, let me just see if I've got the page number here. On page 186 in your textbooks if you want to follow, if you don't want to follow on the screen. Okay, so the first thing you need to do when you get a question like this is we go to the you are required to. So what do they want from you? they just scroll to the bottom. So required. Okay, use the relevant transactions from those provided in order to complete the questions for the month of October. Okay, they want you to do a creditors journal. They want you to do a creditors allowance journal. They want you to do the cash book payments journal and the general journal. Then they tell you clearly specify if the VAT column is input or output VAT, and then all amounts are inclusive of VAT unless otherwise indicated. Okay, original invoices and original credit notes have been renumbered. Okay, so we have to do a creditors journal, a creditors allowance journal, a cash book payments, and a general journal. Okay, so let's go through each and every transaction, and then we fill them in as we go along. So I'm going to do 4 or 5 transactions, read them, and then we'll go capture them, and then we'll go read them again and capture them as well. Okay, so on the first, okay, let's first read the intro paragraph to see if there's any important information. You're the bookkeeper of Milano Traders. The Traders is a registered VAT vendor. Okay, so we are a registered VAT vendor, so we know we need to deal with VAT. Okay, and they only trade with registered VAT vendors, meaning they can claim input VAT on everything they do. They charge 15% on all its sales, so the rate is 15%. As the bookkeeper, you have been provided only with source documents for the month of October. We use the perpetual inventory system. Okay, perpetual inventory system. To what a general ledger account will you capture that information? Any purchases, where will we capture it? Perpetual inventory system. If we purchase something, to what account will you capture it? You can type your answer in the chat function. So I'm going to repeat the question. If we talk about a perpetual inventory system, to what account do we capture a purchase of inventory?
Ma'am, wouldn't it be to inventory and cost of sales?
Okay, so it would be trading inventory, that's correct. So remember, trading inventory, the asset account, so you take it to trading inventory, whereas if it was periodic, we would have taken it to purchases. Okay, the cost of sales, we only take it to cost of sales once we sell it. Okay, so the cost of sales does not happen when we purchase it, but only happens once we sell our goods to a third party. Okay, so that's just important to remember. Okay, so let's quickly see. We say trading inventory is marked up by 40% on selling price. Okay, if it is on the selling price, what amount will represent the 100%? Okay, so Lino says sales price, Nick says sales price, that's correct. So if you see on selling price, our selling price is 100. That means our markup is 40. So what will my cost of sales price be then? If my sales price is 100, my markup is 40. So my profit is 40. What is my cost? 60, that's correct. Okay, so this is what you have to look out for. Is it on selling price? Is it on cost? Okay, if they tell you it's gross margin, is the other term that they can use. Gross margin also tells you it is on selling price. So I'm just going to highlight here and tell you this is on selling price. Okay, so they can either tell you it's on selling price or they can tell you it's the gross margin percentage. It means exactly the same information. Okay, and it's done before any trade discounts is given. Okay, and the rest of the information is not that pertinent. Okay, so let's read. We're going to read the first few transactions and then we'll go capture it in our Excel file. Okay, so on the first, Igloo, trading inventory, we purchased trading inventory. Okay, so where do we capture trading inventory we've purchased? Will it be a creditors journal or will it be a cash book payments journal? Okay, so Lino thinks it's a cash books payment. What does the rest of you think? And do they also think cash book? Okay, in this scenario, the invoice is actually a creditors journal. So invoice is credit, whereas your EFT, CS, or your OCTs is your cash items. Okay, so in this scenario, the IVs is your IV is your creditors journals, your OTCs is your creditors allowance, so that's anything that was returned, bank statement or EFT CS, so your cash receipts or supplies, that is the cash one. So the first one is actually your creditors journal. Now, in your test, they will generally give you something that's a bit more clearer so that it's easier to identify which one's on credit, which one's on cash. Okay, so the first one goes to your creditors journal. The second one, Leak City, payment for business plumbing services, repairs and maintenance. Okay, now that one is your cash book. Okay, and then on the fifth, Igloo Pty Limited, trading inventory return to the supplier. Okay, so it's something that we bought that we are going to return. So that is your cash book allowance journal. Okay, and then on the 8th, we withdrew cash from petty cash or withdrew cash from for petty cash. So this would be your cash book payments. Okay, so we took it out of the bank account. And then on the 9th, we've got an EFTCS payment on account to Igloo. No settlement discount was received. So this is just a normal payment, so your cash book payments. Okay, so I'm going to now share the Excel file. So let me just share that with you guys. Okay, can you just indicate in the chat function, can you see the Excel file on your screen? Okay, excellent. Okay, so the first transaction we said we purchased trading inventory on credit for 31,875. So that is our creditors journal. Okay, so what you do is remember that 31,800. Let me just make it slightly bigger. 31,875 is the amount that they've given to you. Then, because we said we are registered for VAT, we have to take that amount and multiply it with 15 over 115 to work out the input VAT component of it. And then the remaining goes to trading inventory. Now we know it's trading inventory because of the fact that we've got a perpetual inventory system. Okay, then on the 4th, we said we made a payment for business plumbing services, repairs and maintenance. So that was your cash book payment. So let's scroll down to the cash book payment. So we've got League City. The amount they've given us was 656 Rand and 25 cents. Okay, then we can claim input VAT on that at 15 over 115, and then the remaining 100% will go to our repairs and maintenance account under our Sundry column. Okay, then on the 5th, Igloo Trading or Igloo Pty Limited trading inventory returned to the supplier. So we said we returned goods, so that would be a creditors allowance journal. So we've got Igloo, the amount was 2,868 Rand and 75 cents. And then we can claim input VAT at 15 over 115. And then the difference goes to your trading inventory column. Then on the 8th, we withdrew cash for petty cash. So that is in your cash book payment. So this is the cash amount, so that would mean there is no VAT implications. So we just showed the 24,375 and the same amount goes to petty cash with no VAT implication. Then on the 9th, we said a payment on account to Igloo Pty Limited. No settlement discount was received because the account was not paid in full. They did give us the amount we paid, so you did not have to go calculate it with the information provided. So that full amount goes to your creditors control, and this also does not have any VAT implication. Okay, so on the first 5 transactions, do you guys have any questions? So on the first 5 transactions, do you guys have any questions? Okay, then we're going to continue with the question. Can you all just indicate, can you see the PDF on your screens? Okay, so then on the 11th, max suppliers trading inventory purchase. Now we said this is a cash book payment. Then on the 11th, Gordon CC trading inventory purchase. So it was invoice 202. So this is a creditors journal. Then B Moodley. B Moodley contributed furniture and fittings to the business. Now B Moodley is the owner. Because he contributed furniture and fittings, this would go to your general journal. What is very important is the fact that they tell you all legislative requirements have been made for full VAT amount. So that means that you can claim the input VAT on this transaction. If they do not state that, you cannot claim the input VAT for that specific transaction. Then on the 13th, Trend Traders, trading inventory purchased at 46,250 less 10% trade discount. Okay, so at what value would you capture the purchase here? Would you capture it at the initial 46,250 or would you capture it at a different value? Okay, so Andile says a different value. What value would you capture it at, Andile? The rest of you can also assist Andile. Lino also says a different value. So at what value will we capture it? Okay, so Lino says at 41,625. Okay, so it is at 90% of the value. So it is the 100% less the 10%. That is what you would have captured it at. Okay, so indeed that's correct. Whatever is less 10%. Okay, so as soon as you see trade discount, remember that you need to account for it when you do the calculation. Okay, then on the 13th, Burton purchase of packing material. So that was also invoice. So that would also be your creditors journal. And then on the 14th, the paper port, cash purchase of printing paper, postage, and stationery. So that is your cash book payment. Okay, so I'm going to stop here and then we'll go capture this information. So from the 11th till the 14th. I'm just going to share the Excel file again. Okay, so the first one was on the 11th, Maxi Suppliers. We purchased trading inventory for cash. So on our cash book payments, on the 11th, we've got it's Maxi Suppliers for 45,787 Rand and 50 cents. Okay, and then we claim the input VAT, which is multiplied with 15 over 115, and then the remaining 100% is taken to trading inventory. Then also on the 11th, we purchased inventory from Gordon CC on credit. So we capture under creditors control the 34,500, which is the amount inclusive, and then we can claim the input VAT, which is the 34,500 multiplied with 15 over 115, and then your trading inventory is the remaining balance. Then on the 12th, B. Moodley contributed furniture. Now, because of the fact that it's furniture and not cash, we would capture it in the general journal. We would, yes, Lino? You can put on your mic. Lino, do you have a question? Lino, if you've got a question. Okay. I didn't hear you. Did any of the other students hear Lino? Okay, Lino, you can type the question. I'll wait so you can type the question quickly. On the CAG, isn't the VAT output VAT? Okay, so your question is on the CAJ, so our allowances. Yes, you are correct. Well done for spotting that. So this should be output VAT and not input VAT. Yes, Lino, you are correct. Well done. At least someone is paying attention. Okay, so it's input VAT for your creditors journal and it's output VAT on any returns. Okay, so thank you for correcting that for me. Okay, so if we go back to the goods that the owner contributed. So we said it's furniture and fittings because of the fact that it's not cash. It would be under our general journal. But furniture and fittings would be the amount excluding VAT, okay? Because of the fact that they stated that all legislative requirements have been met, we are allowed to claim the input VAT on their furniture and fittings, and that's why the furniture and fittings would be the amount excluding VAT and not inclusive of VAT. Okay, and then the total amount, the 22,500 that was contributed, goes to capital. Okay, do you guys have any questions on this journal entry? Do you have any questions so far on what we've done? Okay, let me continue then. So on the 13th, Trend Traders trading inventory was purchased on cash for 46,250 less 10%. Okay, so this in our cash book payments. So we said the value we would capture would be the one excluding the 10%. So here you can see it is the 41,625, which is the 46,250 multiplied with the 90%. Okay, and then you apply the VAT the same as with every other transaction. Then on the 13th, Burton, we purchased of packaging material on credit. Okay, so it's the 1,275 Rand, and then we just apply the VAT the same. And because it's packaging materials, you take it to the Sundry account. Then on the 14th, the paper port, cash purchase of printing paper, which goes to postage and stationery of 1,350. So you've got the 1,350 and then the VAT exclusive amount going to postage and printing. Okay, so let's go back to the question. Okay, so on the 16th, we've got Gordon CC. Trading inventory was returned to the supplier, so this is the CAJ. Then on the 16th, Sony purchased the staff room coffee machine for the purpose of staff entertainment. Okay, so this is CJ. Would we claim any input VAT on a coffee machine for the staff room? Will we be able to claim any input VAT for the coffee machine for the staff room? No, we will not be allowed to claim input VAT. So I'm just going to write here, no input VAT. And the reason for this is it's an entertainment expense. So input VAT is denied. Okay. And if we also look at the 16th, Sony purchased the laptop for sales representative. Okay, so this is for sales representative. It is part of the work, so we would be able to claim the input VAT on this. So this would go to CJ. Then on the 18th, Southern Motors, we purchased a sedan vehicle for a sales representative motor vehicle. So this is cash. Okay, so because of the fact that this is for a sales representative and it's seen as motor vehicles. Okay, do you think you would be able to claim input VAT on that? So that vehicle that we've purchased for the sales representative that is seen as a normal motor vehicle, would we be able to claim input VAT for that amount? Okay, so this is a trick question. Actually, no. Even though it is for sales rep, input VAT is denied because of the fact that this is a passenger vehicle. Okay, so that's why they put in brackets as a motor vehicle. If it was a delivery vehicle, you would have been able to claim the input VAT. Okay, so that is just one of the exceptions. You don't look at what we use it for, you look at what type of vehicle we are busy with. Okay. Then on the 20th, Gorton CC, settlement of account of Gorton CC less 10% settlement discount. Okay, so here you get a 10% settlement discount, but we don't know what the value is. So here we will have to work out the value. So what you will have to do is they give you the opening balance, and then we'll have to go see what other purchases that we make, what reach that we make to work out what is the new balance, and then we only apply the 90%. But then you'll see just below it on the same day is the journal voucher for the discount we received. Okay, so these two transactions go together. The one goes into your cash book payment, and the other one goes into your general journal for the discount that we received. That does not fall into the cash book payments. Will go to your general journal. Then on the 21st, the drawings by the owner. Okay, so this is cash drawings, so this is part of your cash book payments. Then we've got a journal voucher number, drawings of trading inventory with a selling price of 1,875. So this will go to your general journal. And remember, when we take our drawings, it is always at cost. So for this one, we will have to go work out the cost price. And that is where the markup percentage is important. And then on the 21st, we've got a rebate was granted on the laptop that was purchased. So we say a rebate would go to your credit allowance journal. Okay, and let's just do the last 21st. On the 21st, trading inventory of 5,911 and 76 Rand, less a 15% trade discount. Okay, so the trade discount would go to your creditors journal. Okay, so let me just stop sharing here, and then we'll continue on the Excel file. Okay, so Gordon CC, trading inventory was returned. So we say returns go to your creditors allowance journals. Okay, so it's straightforward, the 3,450 Rand, and then we just claim the output VAT, or we raise the output VAT, and we take the difference to trading inventory. Okay, then on the 16th, Sony, we've purchased a staff room coffee machine for the purpose of staff entertainment. Okay, so that it was on credit, but we said because of the fact that it's staff purchases, no input VAT will be allowed as it is an entertainment expense. Okay, and you can take that coffee machine to equipment, or we would have taken it if you said office equipment or furniture and equipment, we would have given you a mark for that. Then on the 16th, Sony, we purchased a laptop for a sales representative. Okay, so on the 16th, it was also an invoice. That one you can claim input VAT for because of the fact that it is used for business purposes and it is not one that has a limitation on it. Then on the 18th, we purchased cash, we purchased a motor vehicle. So we said because of the fact that that motor vehicle is one of the prohibited items where input VAT is denied, we will not claim any input VAT because it is a passenger vehicle. Okay. Then on the 20th, we settled our account with Gorton CC. Now this is where you have to go do the calculation. You take the opening balance, you add any additions, you subtract it. So they've given us the opening balance of 4,140. The 34,500 comes from here, from our creditors journal, and then the 3,450 comes from our creditors allowance journal, which we deduct, and then we got a 10% discount, so we multiply with 90% to work out how much was actually paid. And then the second step to this is the discount that was allowed, the 10%, you work it out exactly the same, and you raise output VAT on the portion that we're not going to receive anymore, and the rest goes to trading inventory. Then on the 21st, drawings by the owners from our cash book payments. Just straightforward 4,500. And then the last one, okay, now we've got three more before we take a break. Then B. Moodley, drawings of trading inventory with a selling price of 1,875. Now this is where we had to be very careful that you make sure that you got the 40% on selling price. So your selling price is 100, markup is 40%, so your cost is 60. So to work out the original cost of the goods is the 1,875 times 60 over 100 means the cost was 1,125. Because of the fact that the owner takes it, we have to raise output VAT on that transaction, and then the remaining portion goes to trading inventory that has been reduced. Then on the 21st, we have a rebate was granted on the laptop that was purchased. So the rebate would go to your credit allowance journal, and the VAT would be accounted for as per normal. And then also on the 21st, the trading inventory of 5,911 Rand and 76 less 15% trade discount was purchased. So you have to take off the 15% trade discount. So it's 85%, and then you apply the VAT the same. Okay, before we take a break, do you guys have any questions what we've done up to entry on the 21st? Do you guys have any questions so far?